NVIDIA's earnings dropped last night, and the numbers were so flawless, I almost feel bad saying it was priced in. I wonder if Dwayne Yongping is happy with the reveal after levering up his position 11x last quarter. Let's look at the point. Top line $68.1 billion, up 73% year over year, absolutely smashing the top end of guidance. And bottom line nearly $43 billion, almost doubling. But after hours, the stock popped, then gave us a classic fade, a full round trip. It ended up barely 1%. Why couldn't top-tier earnings move the needle? Well, today I'm going to break down the pricing facts and the hidden undercurrents of this report. First off, drop the conspiracy theories. This is just positioning. Wall Street has made a habit of selling the news on NVIDIA. Face reality. NVIDIA is a $4.8 trillion behemoth now. At this market cap, beating expectations isn't enough. The market demands a miracle. Perfection is already baked into the valuation. The second retail FOMO was in, institutions are distributing their bags. Plus, there was a sneaky bearish signal hidden in the call. The CFO mentioned channel inventory is healthy. Historically in the market, smart money reads that as a leading indicator for demand softening. I checked EBC Market Buzz, and bullish sentiment on NVIDIA is extremely muted right now. It's mostly neutral, which means big money is sitting on the sidelines watching. The truth is, Wall Street has changed the scorecard for NVIDIA. It used to be about how many picks and shovels you could sell, but now it's about, are the guys buying the shovels actually making their money back? Where is the ROI for LMs? If AI can't reach every consumer and generate absolute cash flow like the mobile internet did, then this is a bubble. The market knows NVIDIA's 2026 numbers are safe because Microsoft, Amazon, and Meta are still dumping $700 billion into computer CapEx this year. If the big tech keeps ramping CapEx and 2027 AMD convinces the market they aren't incinerating cash, then new all-time highs are no problem. But if the downstream application layer can't monetize, are these giants going to keep playing the dumb money? Until this bear case is solved, the AI sector is going to suffer growing pangs. That exact anxiety is what drove the after-hours fade. Remember last November, the day after NVIDIA's earnings, the stock gap up and crap out, dragging the whole AI sector down with it. Cloud and AI services dropped 5 to 10%, and memory giant Sandisk nuked 20%. This time is different. The memory sector is showing massive relative strength. Western Digital popped 7%, Seagate up 60%, and Samsung and SK Hynix have been catching beats every single day. This proves my exact thesis. Capital is only rewarding companies that are actually monetizing the AI loop. Big tech is currently negotiating with the Trump admin to let AI data centers generate their own power, which is why the grid equipment sector has been reaping. So memorize this playbook. America is starved for power, and the world is starved for memory. Let's zooming out of the macro. The S&P 500 is currently chopping around the 6,900 level. Keep your eyes glued to the initial jobless claim data tonight at 9:30 p.m. EST. If the labor market comes in hotter than expected, the market stoppage rate cut pricing is going to get a bucket of cold water dumped on it. While the Fed still has rate cuts and QE in their back pocket, so the market won't crash, NVIDIA's good news exhaustion could easily drag tech and gold into a downside stress test. Okay, back to NVIDIA. Fundamentals are bulletproof. It's still a top-tier asset, but short-term RSI is overbought. This is absolutely not a clean entry. Wait for a pullback or just trade swings. The next real catalyst for the stock is the GTC conference on March 16th. The new Vera Rubin architecture and the next-gen GPU roadmap, that's the real alpha. Zooming way out, 2026 is still going to be the breakout year of AI applications. The current chop and sell-offs, that's just the market flushing out weekends and deflating the multiple. The market will always give you opportunities. The only catch is when opportunity knocks, you better have dry powder in your accounts.